Morning everybody, welcome to Stockradar Stocks on the Move for another week. Tomorrow's date is the 7th of March 2024. My name is Richard Lee and I manage the stockradar.com.au website for you. Coming to you from home base tonight. I can't do the video tomorrow because I'm off tomorrow up the coast for a couple of weeks. A bit of camping, surfing and swimming, which will be really good for us all. I will be trying to come to you on Thursdays, depending where I am, but I will try and keep you updated with the market as I see it. At the moment things are going on pretty well. We're just raising our stops and making new highs and adding new stocks to our stock portfolio. It's all been a pretty good period at the moment, so it may change, but for the moment all looks pretty good. Okay, so that's a little update there. Now, do you remember 2003, 2006? Some of you will, some of you won't. It was an amazing period. Stocks were making new highs willy-nilly for nearly 2-3 years. And it all exploded in the end, as we know, but you still could make a lot of money in that period, which we did. So it's sort of, inklings of what's happening at the moment. We're getting to these new highs, getting some great money making opportunities. The stock you'll see in a minute, Reece, which I'm in the stock of the week there, has risen nearly $3 in a week, from 24 to 27. I mean, go figure. But anyway, it is an amazing period, and now's the time after the last couple of years to really make some money. So what I'm going to talk about today is, again, trend intensity, which is a really important part of what I do. What's it all about? Okay. Excuse me. Trend intensity triggers entries, and money management directs the trade. Okay, that's really the simple lay of the land for me. You can manage all your positions with the trading centre. Everything's in there. You can track all your positions with your own trading centre under your portfolio, which is also a tab on the Stockradar website for you to do that. And you can keep it all managed. It's important we keep all that data managed so we know what we're doing, we're comfortable with what we should do, and we know exactly what to do at the right time. So that is really important. Markets don't go one way, and it's sort of nice at the moment, but we've just got to be aware of that. So some stocks have come back and are testing stops already, so watch those carefully. Just as stocks come in, stocks go out as well. So don't fall in love with stocks. It's a dangerous thing, okay? You've really got to look at things cool, calm and collectively and make sure that the price never lies, and make sure you listen to it. Okay, positives this week. A couple of positives. One is gold, which is seems to have having a rally high, making new highs, I think, last night for the current move. Sort of breaking out of that little range. I'll have a look at that in a minute. And the other one is the ASX 200, which seems to be consolidating its position above the highs. It's still in a pattern of high highs and high lows, so we're watching that. But it sort of struggled a little bit around the highs there, tempered off a little bit. Resources dragged things a bit low, but we're back again, and the market's been pretty strong, so I quite like the look of it at the moment. So firstly, let's get to the top 10 and see what we've got there. Now, there's a lot of top 10 ratings, as we know. There's probably about 25 top 10 trend intensity ratings of 10. This is just a smattering of a few of them, which I find interesting. Next DC, which is finally broken up, taken over the mantle from Pro Medicus, I think. Not that they're similar stocks, but they're both in that sort of young and growing area. Cochlear is a bit of wave, fantastic wave. Rio's been beautiful performance. WiseTech's now kicking high since it broke up to new highs. Wesfarmers going really well. James Hardie, Aristocrat, slow start, but it's now starting to move well. Ampol, good new highs. Reliance Worldwide's been amazing, and Reece, which you can see there, has also been amazing. In fact, since the start of 23, it's been rising from a low of 14 to up to be nearly $27. So it's nearly doubled its price in just over a year, which is pretty amazing, really, when you consider. So we've caught most of the move. We've got a little stop out in the middle there, which is fine. We protected just in case, but we've got on the new move again when it rose above about $21 or $20 there. And it's been up around 27 now. So those are top 10 intensity ratings. There's a whole lot more of them on the website for you to have a look at there. Okay, so that's the ratings. Stock pick count is up 1 this week. We had a couple out. There was an ETF out. Guess which one? Well, you have to go to Stockradar to find out. And there were 3 new entries, interesting entries there on the stock front there. So get a look at those ones because they're quite good stocks for you to look at. So we're up to 63 stocks again. I think in 2003, 2006 I talked about their stock pick count was sort of up around 70 or 80%. Here we're still well below 50%. So there's a lot of room to move, and that's probably where the market was in 2003. Just starting to get on, starting to get moving. The bull run was starting to move, and there was only a few stocks, but they gathered as they went through, and that's how that works. So we might be in the early stages yet, but we take it each week by week and stock by stock, and that's how we play it. So no two markets will be the same. Okay, so that's the top 10 on the stock pick count. So let's just go now to the markets. And firstly, let's have a look at the Dow. Again, it's come off a little bit, had a little bit of a correction, and it wouldn't be any harm at all for this to come back and have a bit of a correction, because there's a lot of froth on this market here, a lot of excitement, and to come back would be probably quite a nice thing in the scheme of things. We want this trend to continue high, but it can easily come back to West 1 here around the average. We're just still a couple of thousand points down and still be okay. So there's a bit of a correction that could potentially happen there, but we just wait and see how it develops. You can see a bit of volume going on there, which we haven't seen for a while there. So certainly a bit of a check there happening there. S&P is probably a little bit the same. It's come down not much compared to what we've seen up. The volumes really is not even like the Dow. It's still holding up pretty well. So plenty of green bars here, not a lot of red stuff happening there. So it's looking pretty good. The Nasdaq, well, it's hit its high, almost sort of just got through it really. Or did get through it really. It comes sort of straight back again. So it's sort of dilly-dallying around those highs. But really, again, we've had this huge rally here for the moment, and it wouldn't be an uncertain thing for a natural correction to happen from here. So some of those stocks have got very, very overheated over there and need to just adjust, whether it's sideways or down. It would have certainly helped the temperature of the market, bring it back a little bit. Okay, the S&P 200, ASX 200 is also the S&P ASX 200 is also looking good. As you can see, it's just got a good week last week. It was quite a good jump, and we're sort of starting to move above these highs. This is a pretty significant highs here. 5 big tops here. We seem to be kicking higher again. The trend is up. High highs, high lows. All the things are right. Momentum, moving averages, all the signals are right there for this market to continue high. So that looks fine to me at this stage. Now we have a check out on gold. Well, it's an interesting one, gold. It's kicked high through that resistance point there, R1. So we might be getting a bit of a rally in gold. Some of our gold stocks here, I haven't really got any triggers, I don't think, yet in the gold stock, because they've all been hammered down pretty badly. But the gold price is going again. Not a huge amount of volume. Momentum is just ticking into positive territory, so it may go, but it's a dangerous market, gold, for those who want to play there. But the gold price certainly looks like it wants to go higher for the moment. Copper is really not telling us much at all. It's still in that range there between S1 and R1, not doing anything, going sideways. No trend, mixed volume, momentum flat, nothing really there. And of course Brent Crude, which is in a similar situation, just going sideways. Very tight range the last few weeks, which is unusual for Brent Crude, but that's the way it is. Okay, no trend. No friend. Okay, now let's get to some stocks. Okay, on the start of this thing, I had CBA. I love the brokers. They all love to cane it, and they've been trying to sell this thing since about 110. But up it goes, up it goes, up it goes, and let me just get this down a little bit there so you can see it a bit better. It's now, I think today it's up another $1 or so, up or above 118. It just continues high. We had a very good breakout up here. We've had good volume, we've had good momentum, good average. If I just focus on the one thing, the price, and I don't worry about other things, about being overpriced or being overbought or whatever, it helps me a lot just be focused on what the price is doing. And the price is always right, and it's going up. It will change at some stage. It had a terrible time for a couple of years there, just chopped about there. But for the moment it's going up, and so I'm going to ride this one as hard as I can and as far as I can. Okay, so it's fine. It's broken out of a range here, and when I get a range like that, I can usually extrapolate up the range to give me a rough target, which says about 130 here, about $20 up. So it might have a bit of gas left in the tank there. But again, all I'm really going to do is raise my stop, and that tells me when I'm going to get out from there. Okay, so Commonwealth Bank's trend intensity rating in 10. It looks fantastic. Don't worry about what everyone else says. If the price is going up, then it's probably going to go up. Okay, now some of these stocks are pretty extraordinary as to what's happened here. We look at NextDC. It had a big move up, 2020-21, correction for about 3 years, and now we've seen this market move up higher and now made new highs, trend intensity rating of 10. So it's looking pretty good. The volume's okay there. Let me just try and blow this up a little bit for you. Volume's okay here, expanding nicely in the break. Momentum's good, the average is good, so it's going for a bit of a run. Of course, it will come back at some stage, but don't worry too much. If you're on the trend, ride the trend as best you can, and just lift your stop for the moment. So these are what the stocks are doing at the moment, and there's not a lot of difference between a lot of them. They're all doing the same thing. Just slightly different pictures in all of them, but roughly the same. The two next stocks I'm going to go through, which I have gone through before, I know. Ventia, which has been a great mover. Last couple of weeks it's just consolidated, but as you will note, there's no real selling has hit this market, or any selling that has hit the market has not had any effect on the price. So can see the volume there. It's not too bad. It's a bit hard to read it with all that small stuff there, but it's been okay here. The fact is the price is going up, the average is up, momentum's up, and it's broken out of this range. One of those new listing stocks which has broken out of its range, had a funny start, went up a little bit, then went sideways, and then it's gone up again. So the market likes this one here. A trend intensity rating of 9 for Ventia. All looks good there for the moment. Raise your stop. Mine's quite high now because I want to make sure I protect this gain which I've made and lock it in. So again, we can always go with a new high if it makes it again, but I want to make sure this gain is locked in if it comes back. Okay, so Ventia's twin intensity rating of 9. GQG Partners done exactly the same thing, except it went down to start with, then went to a trading range, and now it's broken up higher. So this is what they do, and it's a fairly common pattern between most of them. Trend intensity rating is 10. It's gone up really well. This is as of last week with the green bar there. This week's not taken into account on trend intensity, but you can see all the green bars here. The momentum's good, average is good. Similar picture again, trend reversal breakout, and the market goes higher, and we get more signals. ArbCorp again, caned because it's too expensive, this stock, but it's always expensive. It commands a premium. That's what it does. It's that sort of stock. So don't worry about the people that talk about stocks being expensive. They can get expensive and they can get cheap. But if you listen to the price will tell you when it's going to change. Okay, so for the moment, this stock is going up, and we can see the volume here is pretty good there, certainly on the rise there. Momentum is good, average is good. This is probably just getting going, and if we go anything to go by some of these other markets, this could well be straight back up to the highs pretty quickly. The way the market is, this is what it does. And so fundamentals can be pushed aside a little bit here. It's really the price and the human behaviour that's driving the price. So it's had a big 50% correction here, came right back, found a good support, accumulation, now broken out, and now the cycle turns into an upward trend. And that's how it works. Okay, so that's ArbCorp. The next one I want to look at is Westpac Bank. Now, I know the banks have all now started to catch up to CBA. NAB's broken out. ANZ almost has. Westpac's broken out as well. I just find this chart interesting because when you look at this chart, it really is, if you just focus on what the price action has done here and how it's behaved, you get a fairly interesting picture. If I just go through this for you. Now, firstly, we know that we've had a downtrend since 2015 from $40. Okay, so that's been like a 7 or 8 year downtrend for Westpac. Down, it goes, lower highs, lower highs, lower highs. Okay, now here we got the cycle low back in here in 2020. Okay, still we had a rally, but still we've got lower highs, but we've now got a higher low. Okay, so this has been happening before. So this is a bit of a warning sign here that demand is coming back into the stock. Early days yet, we're not doing anything. Okay, so get to this pattern down around here, and we start breaking this downtrend. It's a very, very valid downtrend because it's got so many points on it. If a trend line has 2 points on it, it's hardly worth anything. If it's got 5 points on it, it's worth a lot. 10 points, it's a big line. So that's what I look at here. It's got plenty of points on it. And we get to this point here, and price starts to rise. It goes above the moving average, which is done before, so no biggie, but it is one thing, and we've got to start building our picture from here. So we've got the lower high here, the higher low here. We've now got to broker the average, and this area here really is the switch zone here, because we now start to get volume picking up, momentum turns positive back here. Okay, and then we get a breaker. This is a series of highs, 1, 2, 3 highs. And that's 3 highs, which are all pretty stubborn highs by the look of it, because they turn the price back pretty quickly each time. So we've now got a break of that. So now what we've got is we've now built the evidence to a certain extent where we've got a cycle low back here. We've got a higher low of support back down here. We're now getting a turn in a break of the downtrend line, a break of the moving average. We're getting volume, we're getting momentum, and hello, the stock has gone pretty quickly from 24 and to 26, nearly $27 already. So there's a movement happening there. The human behaviour, the crowd is moving, and that's what we want to see, and that's where we make our money when we see this happening. So Westpac's been an interesting play because it's been so long before this stock has actually done this sort of pattern on good volume and good momentum. So we're sort of excited about the banking sector. I know it's strange, but CBA keeps making new highs. The other banks are recovering nicely. And what's around the corner for the banks, I don't know. There's a lot of sort of negative broker things about no growth and things like that. But the prices are going up, so the prices are what I'm going to focus on, and that's the Westpac price is rising. So I'm on that, and I'm following it with my stop. Okay, so that's Westpac, and that's an interesting one I think you'll find. The other one I covered recently in the newsletter, and this one is a stock that, many years ago, you remember in COVID, this stock just went north in an amazing fashion from sort of $4 to sort of $22 in a few months. Anyway, since then, of course, it's come right back down. It's made a new low here. It's then gone into a stage here where it's started an accumulation pattern here. Okay, again, we've got these high lows appearing across here. We've got this peak up here at the moment. So what we're looking at now, if we have a look at this, let me just blow this a little bit more up. We can see now, we've now got the high lows here, the accumulation pattern here, the high lows. We then break this area here. We're above the average. We get good volume. Momentum's kicking high, so we get a signal trend intensity rating of 10. So again, this doesn't happen all the time, but we get an alignment of the stars here where they all trigger in, and the key point there is really the price break. So this unlocks a high and a high low and a trend intensity rating of plus 10. All signals are green and go on Kogan. So who knows where it will go? All you need to do to keep yourself safe is protect your stop, and to put a stop in, and also listen to it. When it gets hit, you get out. Okay, so whether you make a profit or a loss, you still get out, and when your stop goes off, because you are, if the profit, you're protecting your profit, and with the loss, you are making sure your loss doesn't get any bigger, and that is so important in this game. Okay, so that's Kogan, and there are lots of other stocks I could go through here, whether it's Reese, Worldwide, James Hardy, all those ones I talked about before. They're all doing amazing jobs. So that's what I was going to say. I was going to show you one other thing in the Dow. I forgot to mention this before when I was looking at this before. So we're looking at a weekly chart of the Dow at the moment. This is a weekly chart here. Now, we talk about markets spending most of the time going up. Okay, now we know if we focus on the last couple of years, we haven't been going up. We've been going sideways in the Dow, sideways in the ASX 100, ASX 200. But if we look at a monthly chart on the Dow and click into this one here. Now, this is a monthly chart. We can just go back to, say, 2009, so we've got these two corrective patterns in here, but for the most part, and I think the ASX, if you look at market index, 81% of the time it's been travelling higher, 19% it's been going down. And when you look at this picture here, you can see what markets do. They travel higher most of the time. Yes, they have their corrections, but in the scheme of things, they are short-lived. So we've had a nasty correction here, sideways. It's now breaking to new highs. So now we're going to get some sort of move up higher. So that's just what we want. It's a perspective thing. You can do the same thing in the ASX 200 if you want to. We're not quite as exuberant as the American market, which has made new highs. We've taken a long time to make new highs, but we still have trended higher over the years. So just something I want to point out to you there. On the market, we do spend most of our time going higher, but we tend to focus on the most rare stuff. That's sort of they call anchor buys. Okay, so that's just what I mentioned that about. The stocks that I showed you there are examples of what can happen if you follow your signals. All I'm doing is following signals, and you get onto these stocks quite easily. We've had 3 more new ones this week. There are plenty more setting up in the trading centre in that neutral zone that we look at, where the stocks come out of, break out of. And as you can see from here, with only 63 of 183, 51 stocks of 160 stocks, there's plenty. Another sort of 66% to go up yet. So not that they all will, but there's still plenty of scope for that. So check the trading centre out for that. Newsletter was out last week. We had a stops article, had our tables going, covered the building stocks. I looked at Kogan as well. A bit more of an in-depth look at Kogan. I just had a brief look today, but I did talk a little bit about what's happening and a bit about my philosophy there with Kogan and how things work. And how I just follow price and focus on it. It's the most important thing. If I start focusing on other things, I will get confused. I will get detoured, distracted from what my real game is. Okay, so that's about all I've got for you today. I just wanted to finish off with here on the trend intensity, which is really my main game. It's a proprietary indicator that I use, and it's really just a combination. It's just a weighting of 4 indicators that gives me an idea of what price is going to do. So trend intensity rates of stocks price attributes objectively. Okay, which is a key, namely trending behaviour. So I'm looking at a stock trending behaviour. See, some of those stocks there had already taken off before I got on, because I need to see a trend established before I jump onto that. Okay, because trends usually extend more than we think. So namely trending behaviour and the probability of sustained price movement. There's a high probability once a trend is attached of sustained price movement. Some go big, some don't go big, but the big ones are what we want, and the big ones will make us our money. So we assess the trend intensity, participation, probabilities and momentum. All key price measurement tools that help us gauge what a price is going to do. And this is all built on human behaviour. Okay, what we do, momentum drives trends, we drive momentum. Okay, so that's really how it works. It all comes back to us in the end. So think about how you feel when things happen. You get excited, and that's what happens. Okay, so we focus on this, nothing more, nothing less. That's it, and that's how we approach it at the moment. Okay, look, that's all I've got for you today. I'm off tomorrow. Can't wait. Looking forward to seeing you again next Thursday. Just to finish off, trend intensity is a simple and reliable way to objectively assess the price behaviour of a stock and its probability for price movement. Okay, so have faith in it and rely on it, because it will work for you if you do it properly. So watch your trends, heed your stops, stay safe, and I'll see you all next week. Thanks very much.